Recording in progress.
All right, welcome everybody. Thank you for joining us today. We're just going to wait for a couple more people to arrive, and then we will introduce you to our hosts and our very special guest speaker, Tim Fung. The Q&A is open, so throughout the event, if you do have any questions for Tim or Stu, please put them into the chat and we'll answer those or get them answered for you at the end when we do our little Q&A part. So please feel free to use the Q&A throughout the webinar. So looking forward to a great turnout today. It's already 18 of us online, which is a great start. So we'll definitely get started here shortly. We're also very mindful of Tim's time today. It's a very tight window that we have him for. So we'll definitely be getting started very soon. Thank you so much for all attending. I'm sure we've got people joining us from all over Australia and potentially internationally as well. So once again, we thank you and appreciate your time. I'd like to introduce you to Anthony, co-founder of Think&Grow. He will be your host this afternoon along with Stu Kelly.
Hey there. So I'm Stu. Nice to meet everybody virtually. I am the MD for Think&Grow in North America. Just opening up today before we get to the real reason you're all here to hear Tim and his story of expanding into North America. Thought it worth just providing some context on what we're seeing in the market here in North America. I'm joining from Minneapolis, wintry Minneapolis here right now. So I think clearly it's an interesting time in North America where we're probably in the news all over the world for many reasons. And that definitely has impacts and implications for businesses looking to enter and execute in the North American market. I think what we're seeing certainly is that from an investment point of view, it is still a strong ecosystem, but there's certainly a shift towards profitability and sustainable growth as opposed to pure hyperscaling. So certainly solutions that boost productivity, help reduce costs, would curry favor with the investment community. It is obviously a massive market, and I'm sure as we'll get into the conversation here, themes will start to emerge, but certainly picking your battles makes a lot of sense in North America, understanding who you want to target, and that the market isn't just one monolith, and there are many sub-markets, niche areas that you can be very successful in. So really understanding the market you're looking to enter. It's highly competitive. You not only have a ton of local operators and a ton of local businesses, but clearly international players who've made that move preemptively as well. And obviously from a organizational point of view, looking at wherever you choose to play, the regulatory and compliance world that America can be quite complex with state by state differences. So certainly having your ducks in a row, having a plan together, having a really solid understanding of why the US presents the opportunity you believe it does, and then putting the right people and process and plan together to execute against that is always best practice. So I'm sure we'll explore many of those type of areas and themes with the discussion with Tim today. But thanks for your time. I'll join you back later in the webinar.
Amazing. Thanks, Stu. Appreciate the introduction. For those that don't know me, I'm Ant. I'm one of the co-founders of Think&Grow. Actually, this is our 10-year anniversary this year, so we've been going since 2015. So yeah, we made the 10 years. Look, exciting times for us. We're seeing international growth as a key theme that our customers are asking for support in. Hence why, as a business, we've got people like Stu in other markets around the world. But look, probably enough about me. And Tim, maybe if you could introduce yourself, who you are, and maybe just tell a little bit of the origin story of Airtasker for those that don't know it very quickly.
Sure. So thanks for having me. I'm Tim. I'm the co-founder and CEO at Airtasker. And, before we jumped on this call, Anthony reminded me that some of you all might be too young to remember how old Airtasker is. So we're like an old timer, I guess, in the Sydney startup ecosystem. We started in 2012. So, this is year 13 for us. I guess my background is I did marketing for a while in university, investment banking, joined a elite fashion modeling agency for a while before getting the opportunity to work with a really talented set of founders on a company called Amasim, and then had the idea for Airtasker. So yeah, been going for 13 years for a marketplace for local services. And I guess what's unique about Airtasker is one, it's a community model. So it's not like an Uber for X model. It's very much driven by community. And then the second thing that makes it unique is that because of that, it unlocks the ability to do a lot more with people in your community. So you can really post a job for anything to get done on Airtasker, and that opens up a lot of possibilities for how humans can help each other and do work.
Amazing. Thank you. And just a few maybe like quick stats around, the business. Obviously listed on the ASX a couple of years ago.
Yeah, so we're sort of about a 250 million GMV company. So like that's the turnover of our marketplace. We've got a really straightforward business model which is, that we make about 20% in transactions. So we're about a 50 million revenue business. Happily to be cash flow generative now. So for the last 2.5 years. So, to the studio's point before about the thematic on efficiency and all of that. Definitely had to make some changes to be able to get into that kind of shape, but painful, but very feels good once you've done it. And we're actually generating, enough cash now that we're able to still be cash flow generative as we go and expand into new markets. And so effectively, our Australian business is a bit more established, and we're generating profit and revenue there, and then we're investing that to scale our business into the UK, which is sort of moderately sized now, and it's getting closer to that sort of generating significant revenue and profit, and then the US, which is a little bit newer for us.
Amazing. Thank you. Why go overseas if we just had to like peel back the layers and look at maybe some of that very, very early thinking that you did on, why go into the UK? Why go into the US? Like what was at its core, the thinking behind that?
So ultimately, one of the things that we sort of intuitively did at the beginning of Airtasker, but I think became more strategic once we sort of realized its benefits, was that we focused on getting a lot of operating leverage into the business. And what we mean by that is we're very much a platform. We have a lot of fixed costs because we have to build that platform, and you had to build the brand, that goes with that platform, and all the awareness and stuff around it. But when you're a high operating leverage business, in order to continue to build that leverage, it makes sense to take that platform that you've built anyway, and you're going to spend a crap load of money in anyway, and replicate the economics of how you distribute that platform. And so for us, it's kind of like, I don't know, we're probably spending 35 million bucks a year or whatever on building this piece of software. And so why would you limit it to only selling that software to a very small group of people? And if you can imagine, if you're like Xero accounting, you built this piece of software. I'm guessing that they started in the New Zealand market, but it's like, why would you only go and sell this piece of software to the 200,000 businesses in New Zealand if it basically doesn't cost you anything more to make that software work in, say, Australia, and now you're targeting 2 million businesses, and then do it in America where you're targeting 200 million. I'm just making numbers up now, but you're trying to get leverage on that fixed costs that you've done, and you want to replicate those economics. So that was a big part of the reason why. And then ultimately, a lot of it's just like ambition and fun. Like it's a lot of fun building a business. And I definitely wouldn't call Airtasker like a lifestyle business, but it's definitely that you can have a lot of fun along the way as you're building a big business, hopefully.
Yeah, amazing. So first international market from memory was the UK, but I think you did that, what, 5, 6, 7 years ago? That was your first bite over there?
Yeah, we've
Um,
had a couple of false starts. So
few
happy
false
to
starts?
be pretty vulnerable about that stuff. But yeah, we started in the UK in 2018, the first time, but we've sort of, had a bit of a start and a stop and a start again.
What did you learn from that first sort of, crack at the UK?
Yeah, so there were sort of better times back then for like raising capital and growth at all
Hmm.
costs sort of vibes. And so we were, by Australian standards, we'd done a good job of raising cash. And so I think we did like a $22 million Series A in 2016, and then like a massively oversubscribed $35 million Series B in 2017. And so like, it was great. Let's go like let's
Hmm.
go overseas and try to replicate the model. And I think at the time, looking back on it, we didn't quite know exactly what the model was. And at the time, Uber was expanding a lot, and they had a pretty much a sort of decentralized growth model where it was like, yep, there's an app, but when somebody wants to spin up a new country, we fully empower the local person. We give, they hire their own team on the ground, and they just go turbo and invest all the capital and go hard. And so that was our first attack at the UK market. And so we built a team, we built an office, we spent millions of dollars on marketing in about 10 or 12 months. And it turns out that even though it was super inefficient, it did get us to where we needed to get to, which is we solved the chicken and egg problem, and we proved that we could get the marketplace started. The other problem is that we'd spent like, millions of dollars and built up this like massive burn rate. And we couldn't raise around in 2019 to sort of keep that energy going. And so we had to make some pretty hard calls and wind all of that back. And unintuitively, we learned a lot of lessons in doing that, which was like, hey, we can actually like turn off all the money and it keeps going. um, and so that was actually a really good lesson. It definitely stored momentum, but it didn't crash to zero. And I think that's really where we learned, hold on, Airtasker scaled across Australia without ever setting up an office in Perth or Brisbane or Adelaide, and we have sizable marketplaces in those areas. So why should London be that different? And so it actually made us look at ourselves and work out a much more scalable model, a much more efficient scaling model into new countries, which is a massive blessing in retrospect.
And, that new sort of model, what's a sort of top line, sort of strategy?
So in Australia, back in 2016, I mentioned we like raised a Series A, and again, all of this stuff, it's really funny because when you write it all down, I actually it all looks very smart on paper, but like just like honesty and transparency is that like most of this strategic stuff is just driven by like, oh my God, we're gonna go do this, and then you sort of stumble your way and you kind of keep what works and you throw away hopefully what doesn't work. So I just want to caveat that like we didn't see all of this stuff happening, but basically 2016 we need to raise a Series A. One of the folks that agreed to fund us at evaluation was Seven West Media, which owns Channel 7. And they were like, we'll give you millions of dollars that you need to scale the business and hire people and all that kind of stuff. But you've also got to take millions of dollars in TV advertising and give us shares or equity in the business for that, which is now called like doing a media for equity deal. And so we were kind of given this millions of dollars in marketing. We'd never done TV marketing before. We're like, okay, well, I guess if we got it, let's go large. And so we filmed an ad, we put it on TV, and it did quite well. But even more importantly is over the next 5 years, was a lot of the other players in our space were like spending a lot of money on like performance marketing. And they were much better probably at deploying performance marketing compared to us. We were kind of doing the traditional or the dumb move of going to broadcast. But over about 5 years, it started to become that we had this brand and we built up this like massive, direct to consumer sort of awareness. And so we didn't have to pay much for performance marketing, and we could still, grow the business. And so over 5 years, we about 20x our revenue from like $1 million to 20 something million revenue. We grew our awareness from about 6% to something like 65% in Australia. And then when we listed the company in 2021, we wrote a check to Channel 7 for about 5x their money. It was about like a $45 million check or something. So everyone was just winning out of that situation. And so as we went to the UK and to the US, we're like, how can we replicate that magic in these markets? And the way that we did that, which I have to give a lot of credit to our CFO for sort of working out, is we decided to spin out a separate company, creatively called Airtasker UK, and find a media for equity partner in the UK that could take a big chunk of Airtasker UK, but not, part of Airtasker Australia. And so we were able to raise a lot of media capital to do that. We're scaling it. And then what we said to that partner is, we're going to buy your equity back in 5 years. And we've actually like defined a formula for the way that we're going to buy their equity back. And they love that because they're like, that's fantastic. You're buying advertising off us. We are taking risk. They are taking risk, of course, but we are giving them like a guaranteed exit. We are going to exit you out of this business. And we can do that because we're a publicly listed company. So happy to go and like nerd out on that further, but that's the high level of the strategy. And so as we came to the US, we've done that again, except we've kind of done it with gone even harder, and we've got 4 media partners on the ground here in the United States. So that strategy is sort of working for us at the moment.
Right. And so does that actually mean you've got a similar sort of equity sort of arrangement, but with multiple media partners who in theory would be competing with each other, or do they all have their own like lanes that they look after?
Well, one of the great things about the partnership with Seven West Media and doing a media for equity deal is, first of all, I think it doesn't work for all companies, but if you sort of meet the criteria, I think it's a great way to scale. And it's a strategic partnership in some sense because, they own equity in your business and they want to help you promote your business and get out to more customers, and that's a good thing. But the great thing is that it's not so strategic that they're sort of wanting to meddle in your business. So if you kind of think, like one of the investors I remember talking to, a corporate VC, was Seek, the jobs board. And they have a venture arm and they're interested in investing in us. And we kind of thought about that and we're like, the issue is it's almost too strategic. It's like you guys are actually like a jobs board, and in some sense Airtasker is a jobs board of sorts. And it would not be good if you had that as your, someone sitting on your board and kind of go, how does all that work? Why does this work like that and all that? Because then you might actually find yourself down the line kind of being like, this competes, etc. So the great thing about these media companies, they're very simple companies in many ways, which is like, we're just trying to have the biggest audience that we can and sell as many ads as we can. And we're very overt and clear about that. And so the only thing we really need to watch out is like that they don't try to sell us ads that we don't want. But we've got mechanisms to make sure that doesn't happen.
Amazing. And what are some of the early sort of differences that you're seeing between the US and the UK? And look, maybe just for everyone's benefit, Tim's actually in LA at the moment, by the way. So he's actually based himself over there.
Yeah, and traveling between Austin, Vegas, and LA at the moment because they're the cities that we're sort of launching proactively. Well, the first thing is I would say one of the massively positive side effects of doing these media deals is that we instantly kind of have a very influential buddy on the ground who can help us localize, who knows the local consumer sentiment. Like there's probably no one who knows a city better than the local news reporters and the local podcasters and breakfast radio hosts and stuff like that. Those people, like, they know the country, they know what's ticking. Like, for example, if you're on Kyle and Jackie O in Australia, they know who's on Maps and who's watching, which contestant on Maps is doing what. And that sort of sounds like it's small stuff, but it's actually all the nuances that really matter. I guess one of the big things, I guess, it is probably more expensive to scale a business here. The prize is bigger, but the bet that you've got to make seems to be bigger. Like straight out cost of advertising and things like that, like cost of acquisition of a customer, quite significantly higher, I would say. That's one thing. I guess the second one Stu mentioned before, but I would just double down on that, which is like it is genuinely like 50 countries that sort of have a common language and a common currency and things like that. But spending time in I hadn't really been to Texas much before, but a Texan person versus a Missouri person versus a New York person versus a Los Angeles person. They may as well be from different countries, basically, in terms of like what makes them tick, what they care about, what cultural things are gonna matter to them. Like, for example, I found out, I think from being on the ground in Austin, that Austin people pride themselves on being weird. Like Austin's actual tagline is keep Austin weird. Like that's our thing. We're hipsters, we're weird, and it's cool to be weird. Like, it's like you wouldn't know that. And that's kind of the opposite of LA, which is like, media, Hollywood, mainstream, the big thing. And then I guess the third area is probably just complexity. In Australia, there's like 2 television networks, 2 radio networks, 2 outdoor media networks. This is just an example in media. And in the UK, you can maybe double that. There's maybe 4 or 5 players in each of those things. And in the US, despite it, it's maybe 15 times the size of Australia, but it's probably 50 times as complex. And I think it's because, like, as you have larger markets, you then need brokers between those all those participants in the market, and then because of that, you get interesting deals that happen. So, like in Australia, if you're Channel 7, you make this show called Home and Away, you broadcast it through your network and your distribution, and then you sell ads, in the ad breaks of Home and Away. That's pretty simple. In America, it's sort of like I own the broadcasting network, but I don't actually make anything. I've done a deal with NBC, and they actually make stuff. But then the person who sells the ads is not NBC. It's actually like an ad deal that's been done with like a third-party broker who sells the ads inside the NBC, which gets broadcast through my pipes. And so like everyone's, so it's just a lot more complicated, I would say. And so we really took our time. Again, not necessarily intentionally, but it took us about a year and a half to work out who was who, to go and do these deals. It's a lot more complicated.
Yeah, got it. If people have some questions, could you please start getting those ready? I think you can maybe put them in the chat. On sort of the product front, was there anything that you had to sort of do with the product to get it ready for the market, or were you pretty lucky? It was just sort of a, rinse and repeat.
So I think one of the, again, aspects of Airtasker is that it's almost entirely built on user-generated content. Our platform is such that customers decide what they need to use Airtasker for, and taskers decide how they're going to respond to those jobs. And so all of that is self-localizing. Like here in LA, I think some of the funny tasks that have come up is like stage my home to get rid of the negative juju, or like remove a rat from my driveway, or I need a mime artist for like a dinner party I'm having tomorrow. They're just such LA kind of requests. And in Austin, we had one which is like, I need someone to train my 7 wild dogs. In brackets, they don't like cats. My point of that is just like every market sort of asks for their own things, and then the taskers sort of do their things. So there was some localization, obviously, like currency, time zones, maps, units of measurement. In some cases, language, like we're exploring Spanish because 48% of LA is actually Hispanic. So I'm Spanish first language. So there is some localization at that level, but it's nothing in comparison to how much is like sort of self-localizing. And for that reason, there's very, it makes total sense for us to, I think the framing of like, we're more like zero accounting, which is like, why are you not selling to more people? More so than we are like Uber, which would be more like, hey, why don't you just stick to the market until you've nailed that market, and only move on once you've nailed it. So
Yeah, great. Look, a few people have actually a question I had next, which was, you mentioned, a couple of cities that you're targeting. How did you come up with that list of cities? What sort of work did you do to kind of prioritize and really target those different places?
one of the things that, over building a business for a long time is I feel like you build up intuition. And I think you get a bit more confidence to not kind of like over theorize stuff. Because actually, I think over theorizing is also is a big danger, i.e., getting too confident that your desktop analysis can beat in market analysis, like customer feedback, basically. And so, first of all, I would say the direct answer would be the biggest thing that we triangulated for is distribution. So we actually said, where are all of our media partners? And where do they have the biggest overlap in terms of like market influence? Because the biggest risk in Airtasker is not so much product, it's actually much more on distribution. Like, can you quickly get to scale where thousands of people a week are interacting together? Because that is the customer experience, that is the product. So it was mostly about that, and as you can see from Austin, Vegas, and LA, the thesis around LA was home ownership's pretty high. It's less seasonal, so you have less sort of like snow, no snow, rain, or this. It's California is pretty good. It's logistically close to Australia, and that, although that sounds like maybe it shouldn't be the biggest thing you would do on a customer level, it's much more difficult, I would say, to run a business that's like New York to Australia from travel and a time difference perspective. Then LA is actually quite convenient. It's 1 12-hour flight. It's 19 hours time difference, which is kind of only like 5 hours time difference. So there's a bit of advantages like that. And we also thought that the LA market was like a leading market, i.e., as a tastemaker, if LA wins, you're going to get influence elsewhere. The reason why we did Austin and Vegas is mainly, one, due to our media partners. Two, we actually just did a deal with a Formula One team called Visa Cash App Racing Bulls Formula One team. It's Red Bull's, one of Red Bull's Formula One teams. And there are races in Austin and in Vegas. And so that's also kind of like a media partner to build that hype and awareness and distribution in those markets.
Right. And you mentioned there was very little sort of product risk. Is that partly because the incumbent that you're almost like that's entrenched is almost like a Craigslist or something like that? Like it's something pretty sort of basic, or?
So there's TaskRabbit in the US, and that
Yes.
is, I would say, they've gone down a route such that our products are getting more and more and more differentiated over time. They're going more down like a fixed pricing Uber type model, like standardize the task and make it really slick for that one task and rinse and repeat. Whereas Airtasker's model is embracing community and humanity in some sense. Like, we're kind of like, look, not everyone on Airtasker is perfect, but we're going to give you the tools to find your perfect match. A little bit like a dating website, Airtasker. Like, hey, you need someone to do this thing for you. We can't tell you for sure that this is the right person, but we're going to give you as much information as we can and enable you to ask questions so that you can decide whether you want it. So we've gone a different route. But I would say that we actually think it's easier to scale in a market where there's more competition. And the reason is because if you're like a blue ocean business where you're trying to like convince everyone that it's a good idea, it's kind of like the first thing you're doing is just even explaining why you exist before you even get to say, and this is why you should use me versus the other one. It's actually kind of easier to be like, hey, there's this thing called TaskRabbit, but Airtask is better because we're like more open, we charge less fees, and you can get more stuff done on Airtask than you can on TaskRabbit. But if you really want your IKEA furniture assembled, yeah, sure, choose TaskRabbit. That's actually an easier pitch than what we had to do in Australia, which was like, hey, like, so think about, all these things that you could get done. Airtasker can help you with that. Like, people with eyes would just glaze over half the time. Or even worse, they would say, yeah, that sounds like really awesome. and then they wouldn't do anything because they didn't actually know what they could do. So, yeah, I think the competition thing, I would say it's mostly a good thing for startups. Like, unless you're going up against an incumbent that's absolutely got a stranglehold on the market, like Uber, or something like that, that would be hard. But if you're like building a new piece of software or a product that doesn't exist so much yet, it's actually better to be like, hey, you sell, I don't know, flying skateboards. I also sell flying skateboards. Pick one of us, and that's probably better.
Great. There seems to be a couple of questions sort of coming in around a similar theme, so I'll try to wrap them together. But what functions, if any, have you built out in the US at the moment? Are there any other boots on the ground, or is it just you? Or
We've got a really lean team. So there's 4 of us here on the ground in the US. And to put that in perspective, we're probably going to spend $20 million in marketing and sort of like investing into the market next year. And I think that's a demonstration of like operating leverage. It's actually like you're saying, hey, we've built this thing already. We're just selling more of it. And that allows us to go and invest more into the product and more into that centralized thing. But we're like being incredibly intentional about hiring. I would say hiring as well, it's as much a liability as it is an asset. Like it really, like I've found that the more layering that occurs, often it's like the more layers you're creating, it's not just sort of like the cost of that person, it's now like the communication debt of one person talks to another, talks to another, talks to another, and man, like the cost of that is where the costs stack up. So keeping it really lean. The other thing I would say is, this is like, I know it sounds funny, but I think it's like legitimately true. Australia is almost like the cheap outsourcing center for the US, like in terms of costs. I mean, like the at at 1.7 or 1.6 exchange rate to a US dollar, a staff member who's on $200,000 is sort of on 320,000 Australian dollars. And so, put that in inverse. If you can put more people in Australia, it's a great market to actually to generally like be building out, a lot of areas of excellence, at least relative to the US market.
and what were those roles that you decided were must-have roles in the US?
Growth ops. So we do stuff like on the ground. Like one of our tactics is that when we go to a new market, we actually hire taskers to market Airtasker. And that's actually how we get the flywheel spinning from 0 to 1. Like day 1, go post a bunch of jobs to get people to talk about Airtasker locally. So that kind of role requires localization. PR and media is definitely something that requires localization, like building journalist relationships and then, actually doing those meetings, things like that. So really those are the only 2 things that we have here. Like all of our staff members are either in PR, brand, or growth ops. And I would say that our framing is like the trade-off that we found when we built out a team in the UK initially was, would you rather have people who are closer to the local stuff and the local content and locally what's going on, but far away from product and engineering? Or would you rather have people close to the product engineering, but they can't quite localize and know every little detail about what's on the ground? And a good example of this would be like, initially we were like, oh, pay-per-click marketing, that is probably something where we want someone local. And then we're like, oh, no, it's not. It's actually probably something where you want them closer to the engineering team, because if they need to like iterate on like a page to, CRO it and get the conversion rate up on it, you don't want it to be like, hey, email goes to someone, or Slack message or email or whatever goes to someone in London, comes all the way back to an engineering team. They don't really know what to do. So we were kind of like, now our threshold is more like, unless it absolutely has to be localized, we'd rather centralize it.
Yep, and keep it all in Oz. Yeah, pretty much. Okay, got it. That's interesting. Question around media deals. So beyond the inventory guarantees, how did you structure those deals to optimize? Was it ultimate, or was it more of a leap of faith that it would just sort of
Yes.
happen over time?
Yeah, so we were pretty lucky with the way that Seven West Media structured it with us, because they sort of put it forward to us and we were sort of responding to the deal terms that they gave to us. And luckily they were pretty good. Basically, the way that in general I think these things are structured is that it's a financial instrument. So it's really like they're giving you $5 million of coupons, I guess you could call them, that you're putting on your balance sheet, or you're putting into your, you know, I guess into your notional bank account. And then you're taking those coupons and you're spending it back with them as you see fit. And they only get to recognize the revenue as you spend those coupons. And I think the reason why that's powerful is because they're not dictating to you what you spend. Like if you spend one of those coupons and then you realize you didn't get ROI on it, then you can be like, oh, okay, no, I'm not going to spend with you then. And you've got to wait. Now, of course, you've agreed that you're going to spend a certain number of coupons over a number of years. So, that is, that's always a risk that you're like, oh, none of these coupons work and it's terrible. That's the risk that you're taking. But I think that risk is fairly minimal in media because an eyeball is an eyeball in most cases. The other piece of it is that they have equity in the business. And so actually, I think it's a better form of relationship than how most people buy media. If you think about how you buy media with Meta or Google, it's completely transactional. Like they are literally saying to you, you give me your money, I show your ad according to this spec, that's it, see you later. Like no account management, we don't care about your outcome, you take all the risk. It's literally transactional. And then when you look at like how most people even buy like broadcast media, it usually goes through agencies. And the way it kind of works is like, hey, I want to spend $2 million on marketing next year. So you go to an agency. The agency has 10 other clients like you. So they have $20 million worth of spend. They then go to the media companies and go, hey, I'm the big dog. I got 20 million. You make good by me. And they sort of dangle a little, they use the power play on the media companies. The media companies hate the agencies because they're like, oh, fuck, this guy's, if I piss him off, he's not going to spend 20 mil with me next year. He might go to a different media company. And so the way I would frame like what we've done is we've almost gone like straight to the farmer and said, look, rather than me going to Woolworths and Woolworths screws you over for like how much the price of a tomato is, I'm going to go to you and I'm going to tell you I definitely want to buy 3 tons of tomatoes. And actually, when you think about that, the farmer's almost going like, great. Like, thank you so much for like just being clear with me. You're not sort of like stringing me along and just telling me I'm buying 1 tomato every day. You're just telling me straight out, I'm committing to you. And that makes them almost go like, oh, that's great. I got this customer and I really love this customer because they buy 3 tons of tomatoes off me anymore. And there's no middleman. There's no Woolworths or Coles anymore. And so, yeah, I kind of think of it as like buying media wholesale. And that's kind of better than buying at retail.
Yeah, got it. Stuart, I might hand to you just very quickly. I know you've helped to scale a lot of businesses into the US and often through partnerships. Any kind of comments there on different forms of partnerships that you've seen as a way of building a beachhead into the US?
Yeah, I think Tim kind of hit on the theme of partnerships, like why they matter and why they're effective or how they're effective. It's because there's they augment what you're already doing. There's skin in the game on both sides, like so the media partnerships he described, and they give you that local knowledge. So the example of the morning show, people understanding like the maths example or equivalent. So regardless whether you're a B2B tech or a B2C solution, if you're looking at partnerships, they should be able to do some of that for you, right? That there should be additive to what you're looking to do and give you a bit of a shorthand to success in that market. So certainly most brands looking at a new market, and especially one as dense and differentiated as the US, it's going to suffer from a bit of brand recall and awareness. So a partner can give you some credibility in a local area, in a specific geography, probably has a ready-made pipeline of customers they can walk you into or at least evaluate your solution. So it really is potentially a fast track to some early wins. It's probably not the only game in town and not something that you would put all your eggs in that basket, but absolutely, with a market as complex as Tim's mentioned as the US, partnerships, and those partnerships could be, you know, again, depending on the solution or what your business is, could be anything from another technology that you partner with because there's complementary market opportunity because of that. It could be a pure channel relationship that they just resell your solution to their customers, or something more consultative and like an SI or a GSI who can actually add value and wrap services around what you do and really build your reputation in that market. So it's a complex piece in and of itself, but certainly, you know, definitely should form part of every go-to-market strategy when looking at a new market.
Yeah, great. Thank you. And Tim, as you sort of look ahead to where you take this next, will you use a similar sort of method in terms of, you know, using the media distribution and advertising to sort of pull you into those, you know, secondary sort of cities, or will you take a slightly different approach, do you think?
One of the things about and this is very specific to Airtasker because we spend a lot, we would spend a lot of money on brand building and like broadcast media. So, you know, if you're a B2B SaaS selling medical supplies to German hospitals, like it's probably a terrible strategy. So I don't, it's not a generalist advice, but for us, because that is the case, it actually makes sense for us to optimize our balance sheet by always doing media partnerships. Like rather than us raising 10 million from VCs and then giving that 10 million to like Spotify, Netflix, or some other media company to get distribution, it actually makes sense for us to just cut that out and go straight to Netflix and Spotify and go, hey, will you give us 10 million of ads, and you know, you take some equity in the business and then we'll give you that money back, you know, at some future point. And it also, for those reasons we mentioned before, gives you that localization kind of built in. Again, you know, who knows, the audience is better than Netflix. Like Netflix would know their, you know, people in Dallas love watching this show. You should partner up with that. Or here's a PR opportunity. You know, we're launching Drive to Survive in Australia next week. If you guys are sponsoring a Formula One team, why don't you go and do some cross PR and promotion, you know, around that? So yeah, that's very much like our strategy that we've worked out works well. And so it has like financial benefits, but it's also got like operational benefits too. So we're gonna continue doubling down on it.
Probably last question from me. Look, I think as a like community-based sort of marketplacey sort of model, there can sometimes be the temptation to sort of like, you know, growth hack your way into, you know, success. What was the moment where you realized like that wasn't going to be a good strategy, you know, generally?
What do you mean by growth hack?
You know, like you just maybe test the shit out of things. You like,
Oh, right.
you know, build new features, trial them, try and get more uptake, that kind of stuff.
I think that the big thing in growth that I've seen, and you know, I've had the absolute privilege of working with absolute weapons, like you know,
Yep.
Andre from Canva, and you know, Simon Reynolds, who was like our first CMO, is incredible. Like these guys are geniuses. And I think what I saw was really powerful is you need to have a balance of micro optimization or like local optimization and macro vision and you know directional stuff. You know, there's probably like a few platforms in Australia we can see that like they've optimized it so much that they kind of miss the forest for the trees, you know, and you kind of the wood for the trees. It's like you just kind of like, yeah, that button has been optimized 100 times, but like, was that button even like useful? Like the button works and it's amazing, but this product is not the right product. And so yeah, I think there's always a bit of a balance of those two things. I wouldn't say it's like one or the other, but I would say that we've probably been led. I would say every company is kind of like good at some things and not good at others. I think we're really good at like the big picture principles and framings and product of what we want to be. And you know, we're probably not as good as some other kind. You know, so I want to get better at the micro execution and getting really tight with that. You know, so you can be like a milk run or a eucalyptus where they're just like they're on it. And I do aspire to that in many ways.
Amazing. Look, thank you. I know you have to go pick up the kids. So, look, thanks very much, Tim, for your time. Thanks, Stu, for participating as well. And good luck with the US. And, you know, we'll all be watching and cheering for you.
Sure. Thanks for having me, Anthony. Thanks, Stu.
Stu.
All right.
Right.
Thank you.